Well, good evening, everyone, and welcome to the Empowering You webinar. My name is Stacy Wallace, and I am honored and blessed to be a social executive with Solavei. And tonight, boy, do we have a great list of information that is about to come your way. If you have pen and paper, you definitely want to grab it right now and make sure that you are taking notes because this webinar has the potential to completely change your finances. And I want to welcome to the webinar this evening Juan Williams. You guys are going to be sweetly amazed. Juan is not only a CEO of his corporation, he's also a social thousandaire he's providing not only financial wisdom to people with the mission. You know, I love when I spoke to Juan, his mission is to help families provide generational wealth. And he and I had the privilege of speaking here recently, and me being with him in Dallas, and being able to hear his desire to see his children's children's children be blessed because of Solavei. And tonight we want to share some of the insight that we believe is going to help you make that a reality. Please help me welcome this evening our keynote speaker, Juan Williams. Juan, are you with us?
I am certainly here. Thank you very much, Stacy.
Well, Juan, we are very honored to have you this evening. And for Mr. Williams, we'll be providing his information at the end for Q&A. So, Juan, go ahead and get us started. First off, how did you get into this financial world? What is your passion? Why are you so driven? And why do you see this such a great fit with Solavei?
Back in the 80s, I worked for a company, and during those years, they paid me as a contractor or independent contractor with a 1099, which anyone that's a contractor knows, or independent contractor know that they don't take taxes out when they pay you a 1099. And so I didn't understand anything about taxes. I didn't understand anything about finance. All I knew was how to work. And so I worked and I got a 1099 at the end of the year, and then I took it to a local tax preparation company, and they told me that I owed the IRS $2,000. Well, of course, at that time I didn't have the money, so I told them, what can I do? And they said, make a payment plan. So that went on for 3 years, and I was paying the minimum payments, and then after about 3 years, I somehow stopped paying them, didn't hear from the IRS for another couple of years, and then I went to a bank to get money out, and they had frozen my account. So when I called the IRS that weekend, they told me that the bank at the time had frozen my money, so in order for me to get it out, I need to make a new payment plan. And that was my first dealing with the IRS. And so I said, okay, what can I pay? And they said, what's the minimum? They gave me 5 years, 50, 80 bucks a month. But at this time, I was owing them almost $7,000 with all the years and the interest and the penalty. So I took my time, continued to pay a little bit at a time, but the numbers kept growing. And I was living in Boston at the time, and I decided that if I wanted to really make anything happen, I would have to leave Boston and go to Texas, where hopefully they didn't have any state taxes. So at that time, I left Boston, went to Texas, and continued paying a little bit at a time. Before you knew it, the interest continued to mount, and then I got another letter from them saying that they were going to take my money from my work pay. I was on a W-2 at that time working for a corporation in Texas. Well, it happened that I was driving on the highway, and I saw a sign saying, go to attorney so-and-so, and they would help me not owe the IRS. Well, when I looked at the numbers, I was owing them at this time about $23,000. And so, like a drug addict who just went to prison for serving drugs or dealing drugs, I understood that I had to do something to change how I was filing my taxes. And so I went to the attorney, he filed for me, and a lot of the fees got waived, and then I signed up in a company, and I had a home-based business. This was in 1998. And I didn't do it for any reason except that I knew that with a home-based business, I can reduce my taxes, because that's what they were telling me. And that first year that I did it, I filed my taxes, and the guy who did it told me that I was owing another $4,000. So on top of that money, I'm owing $4,000. So I went crazy. I decided that I have to learn more. So I went and took all the classes I could, met with IRS agents, and in that year that I got in business, by just getting deductions in, instead of me owing them $4,000, the guy who did my taxes told me that they owed me $3,000. I said, hallelujah. That was the answer. And so from 1998 to present, I was able to pay the IRS off every single year, started a business teaching, helping, motivating people that if they can get their taxes under control, they can get out of debt and they can invest. And so it's been about 10 years now that I really haven't paid taxes legally, except for the amount that they wanted, which is the minimum amount, which most years is about $20 or $30. And I did it using their strategies and was able to change my life completely, and been in business for about 10 years doing so.
So what we want to know tonight is, what can they do now to begin to change their financial future like you were able to do with yours?
Well, the first thing that I encourage people to do is, first of all, be in business for yourself. Most people are not aware that there are hundreds of thousands and thousands and thousands of dollars that they are losing every year in terms of taxes, okay? Taxes will eat away a whole bunch of the money. So what I tell people is this: being in Solavei, or if you're in another business, the first thing you have to understand is there's some obstacles that has to be overcome, okay? One of those obstacles is the fact that most people are limited in the income they make on a job, okay? And inflation at 3-4% is taking away most of people's wages that they're making, and so millions of Americans are losing money every single year because of inflation, okay? The other thing is taxes, okay? If you live in a state like Texas, you will pay federal taxes. There's no state taxes here. But if you live in a place where there's state taxes, not only do you have to pay federal, you also have to pay state taxes. And I know in New York and other places, there's local and county taxes. So most people are going to spend about 30 to 50% of their income on taxes. And this causes them to lose a lot of buying power, and they get into debt. And then the other thing is the interest that people are paying on debt. I mean, it used to be that people could go and buy a used car and pick it up for $3,000-4,000. Now people are putting that as a down payment on a $30,000 car with interest rates as high as 18 to 25%. So they're paying for the car twice. And then, of course, the lack of financial education and cash flow management is causing people to really, really make bad financial decisions in their life. And so if people can understand that the number one thing is taxes, because it's the first thing that comes out of your paycheck, and at the end of the year, most people are running to get some of that money back. Okay, so let's talk a little bit about some of the solutions, okay? When someone gets into Solavei, they have to realize that they're not just getting in business for themselves, but they're also getting some huge benefits from the IRS that most people never even understand. Years and years and years of people doing their taxes, running to H&R Block, Jackson Hewitt, and all these other companies to get their taxes done. Nobody is being educated as far as taxes. So let's take a look at some of the solution, okay? Number one, okay, you need to minimize your taxes, eliminate your debt, and minimize expenses. Let's give you some examples, all right? Correct tax withholding is key to becoming successful in business. So most people, when they get a job, they will fill out a W-4 form and give it to their employer. On that form, most of them are putting 0 or 1 or 2, and they think that it's dependence that the IRS is asking for. But what the IRS is asking for really is how many allowances. And allowances has to do with everything from your home mortgage interest to paying church to your children, to whether you're single, whether you're head of household, or whether you are married or filing separate. So all these things account for how many withholdings you put on your taxes. When you get in business, you need to look at the form, the W-4 form, and on the top left-hand corner, it says that you need to change it every time your financial situation changes. So most people, when they get in business, they stop short of filling out a new form. And when they do that, they lose $300 to $500 every month on their paycheck. And what I want people to understand is this. When you get in Solavei, you're not just getting in a phone company. You're getting into a whole new way of doing business and a whole new way of life. So if you were paying the IRS $300, $400 a month, you can actually change your W-4 form, take it to your employer, and get that money in each of your paycheck. So now your cell phone is really free before you even go out and get a trio. Okay, so that's really, really important for people to understand. The other thing is the business deductions that you take. There are thousands of deductions, literally. I mean, just in Solavei alone, I can name 7 deductions that will absolutely make people's taxes go down to the minimum. All right, but the IRS wants to make sure that if you are in business, that you're keeping good records. Okay, record keeping is really, really simple. You can use any tool online, QuickBooks, Quicken. I have a tool that people can use, but you have a cell phone. So just going out, eating, going out to meet with clients, the IRS wants to know, did you write it down? Did you put it down on paper? So for those of you who don't have a system right now, just get in the habit of writing things down in your diary, on your phone, because that is what the IRS will use as evidence that you are in business, okay? Now, what we want to do is then take that money that we're saving from, whether it's lowering our cell phone bill or from our tax withholding, and eliminate all our debt. And I say that because most people have consumer debt. Some of them have mortgage, but you first need to get rid of all those debt first. So take the extra money from your Solavei business, take the extra money from the withholding of your taxes, and use that money to quickly eliminate debt, okay? And then look for every kind of way you can to minimize your expenses. Those expenses include your cell phone, utilities, eating out, shopping, insurance.
Juan, can you hear me? I would love to stop you right there because I think you just made a huge statement that needs to just be reiterated one more time. Because what happens a lot of times, I've been in direct sales for 25 years, and I started in direct sales back in the day. My first check was $8,976. I was 18 years old. And what do you do when you make that kind of money? When you've never had money, you spend money. That's what you do. You feel like, I need to go out and I need to get a new car. I need to go get a new TV. I'll never forget, we had a family that they got a bonus check. They had a huge amount of debt, but instead of paying off debt, they had a car that was just fine. It was a van, got their family around. Now, it wasn't the perfect van, didn't have all the new bells and whistles, but instead of paying down their debt, they went and got in more debt. They got a better van. They owed more on it, but they used that as a down payment on another van. And I think what you just said is really important for people to realize. Solavei has the chance to really change your financial landscape if you'll let it. And it doesn't take you making 20 grand a month for that to happen. You can literally get out of debt with just a few $100s if you become strategic with what Juan is sharing with you. Even on the tax savings, if there's a way that you can begin to save on your taxes and take that money and apply it to debt, don't increase your expenses, but decrease your expenses, you'll begin to see that there really is more to Solavei than SIM cards, mobile service, or even marketplace. This is an opportunity for the average American to be able to change their future. And Juan, I just wanted to stop and reiterate that because I know we've got some folks on here. You're starting to make a little bit of money. I want to encourage you. Use that money, pay off your debt, get debt free. Owe no man anything but to love him. And then even when you have excess, identify how you can begin to be smart with that finances so that you can multiply the money instead of spend it. Juan, back to you.
Absolutely. And, again, for those who may be new on this call or those who have been on the calls before, it's very simple. When you speak with someone, obviously, they're paying way too much on their cell phone. But what they don't understand is that they're 30% or more of their money's taxes. As I mentioned earlier, you have the state taxes, you have the federal taxes, but what people don't realize is every time they pay a phone bill, or every time they pay an electric bill, or every time they go out to eat or buy clothing, there's also taxes that are being taken out in the local businesses are taking those taxes, so they're paying sales taxes as well. So what I encourage people to do is, once you decide that you want to be in Solavei, Solavei gives you a website and they give you the phone app. Well, now the IRS says, okay, you are in business for yourself because you are in the business of making a profit or trying to make a profit. You don't necessarily have to make a profit, but you have to attempt to make a profit. And so by getting in business, you're now attempting to make a profit. So what you need to do is go to your job and ask them for a new W-4 form that you can now refill out for them and give it back to them. Now, there are tools on the IRS website that people can use if they go to irs.gov and go to the W-4 withholding calculator. All you really need is your paycheck and your last tax return, and you can then put the numbers from your last pay stub into the calculator, and it will tell you exactly what you need to be claiming as allowance. This is huge, folks, because the IRS says that from January to June of each year, most people have already paid all the taxes they need to. And over 80% of the people, according to a document from the IRS, overpay their taxes by at least $50 a week. So right there, you can pick up an extra $200, and it's interesting that they say $50 a week. But if you think of your Solavei bill as $49 a month, really, with $50 every week that you've been overpaying, you can pay your Solavei bill and keep another $150 in your pocket in addition to the money that you're making. So this is really important for you to understand, okay? And of course, the business deductions, because business owners have access to hundreds of deductions, this is key, folks. If you know just 7 or 8 deductions that you can take, literally, you can wipe out your taxes by the end of the year. Okay, Stacey, I don't know if you want to go on to the next
No, I want to
slide.
stop here real quick. I've got a couple questions
Okay.
coming in, so let me go ahead and ask you before we go on to part 2.
Okay.
These are very good questions. Number one, Sakina wants to know. She said she missed the statement about what we should do to correct our tax withholding. Can you repeat exactly how people do that? Now, you said you want to go in, you want to get another W-4. Specifically, would you encourage them to go to irs.gov and just research that a little bit as to what they can and can't withhold?
Okay, that's an excellent question. Here's what you want to do immediately. Okay, get your last pay stub. Okay, have that in hand. And if you already did your taxes for 2012, get a copy of your tax return. Okay, and then proceed to irs.gov, and then in the search area, you will see it says you can put in anything. So put in W-4 withholding calculator. Okay, and then what you want to do is take the information. It's just going to ask you how you're filing, single, married, whichever way you're filing. And then you put that on the form. And then it's going to ask you how much money have already been taken out in taxes for the year so far, how much was taken out of your last paycheck. You put all those things in. And then from your last year's tax return, the IRS wants to know an estimate. Did you pay mortgage interest? How much was it? And then the form, it's only about 4 different areas on the form, will come back and it will tell you exactly the number of allowances you claim on your return. Now, to be very particular, what the IRS wants to know is, as most business owners know, is how much are you going to estimate for. They want an estimate of how much will you spend to operate your business. Okay, so they have a place on there that you can put down total adjustments to your income. So, for instance, when you get in Solavei, let's say you go out and get a new phone, you'll put that on there. You're driving your car, you'll estimate, okay, well, I'll probably do about 5,000 miles, 10,000 miles. There's ways that you can go to your job, set up a P.O. box, do all those things so you can get a whole lot of miles. You can write off the interest on your car if you're in business. Then you can also pay your children. If you have kids, the IRS says as long as they work for you in a home-based business, you can pay those kids wages, and it could be in cash, checks, or whatever form, and you can write off the total amount of money that you paid those kids. My son, at age 5 years old, he's been basically in business with me. And so I was able to use at least $5,000 because, and this gets a little complicated because a single person gets an allowance of over $5,000. So you can pay them up to $5,000 and then write that off as wages, and the kids don't have to file a tax return. And they don't have to pay Social Security taxes and so forth, as long as they work for the parent in a home-based business. So now you can literally make $40,000, $50,000 on your job and claim $10,000 of losses and then reduce your taxes to zero. Most people on this call, if you go to that website and put in the numbers, the IRS calculator would tell you that your taxes for the year is zero, because most people are missing earned income credit, child tax credit, child dependent care credits, all these credits. So literally you can not pay taxes the whole year to the IRS and still get a refund of the earned income credits and the other credits, so that you wipe out your taxes and get it down to zero. And so the first thing you want to do is go to the, get your last pay stub, get a copy of your last tax return, and put the numbers in the calculator. It walks you through. It has all the questions there, and I'll be happy to answer any of those questions if anybody needs to contact me, Stacey. So
Excellent.
A lot of that stuff is right on there.
Perfect. Another question that we've got here: what are a few of the best home-based business record-keeping systems that you would suggest? Best cell phone apps? Are there any that you would suggest? And how much?
Yes, I've been using one. It's about $9.99 a month. It's called a Cash Flow Manager. Mm-hmm. And anybody that wants it, I can send them a link for it. And what it does, it really keeps track of all of your expenses, your miles, your meals, everything that you do. It has all the categories in there, and they update it every year. And it's about $9.99 a month. And I've been using that for years. And this way, at the end of the year, all you got to do is click print. It creates a PDF file for you, or Excel file, and you print it and take it to the tax guy, whoever does your taxes, and say, here's my expenses for the year. And it's done. If not, if you don't use one of those, you probably can go and find something on your Play Store, on your phone, and be able then to use that. And this is, if anything, if you don't do anything, get a calendar and write down all your expenses in the calendar for the year. You can always add it all up. Now, another thing that I would suggest for everyone on this call is the minute that you signed up and got into Solavei, you have a business, okay? So you can go down to your local records building in your city and ask them for a DBA. It costs about $13, $12, $15 in Texas. Once you do that, take it down to your bank and open a business account, because now you can use that debit card for paying your bills, for eating out, for going on trips, doing all those things, and you have a record-keeping system right there from your bank at the end of the year once you get your statement.
Excellent.
What the IRS likes to know is who, what, where, why. They want to know, what did you do? When Stacey was in town, I took a trip down to San Antonio to meet with her, so I used mileage. I ate while I was there. I was at a business social, and that's what the IRS wants to know. And that's all you got to do to keep records when you first get in the business.
Well, now, Juan, you could have taken
the IRS,
me out for dinner.
A lot of times,
You could have taken me out for dinner.
I know, I couldn't find you.
For you.
Absolutely. Well, I look for those write-offs because I tell people by the end of the year, you should know. You see, most people wait to do their taxes in January. I say do your taxes already in November, so that if you find out that you're owing the IRS money from your last pay stub, go ahead and take those trips that you need to. Take the family vacation. Go somewhere and promote your business. Have a party at your home and invite everybody that you can. Spend all the money you can, because either you're going to pay to the IRS or you're going to keep that money. I think most people would rather keep the money.
That's excellent. Okay, two quick ones before we go on here. First off, is there an age limit to how old the kids can be? This particular person here, Sue, has an 18-year-old, and then they also want to know, do they have to show the IRS a savings account for the money that they choose to pay their kids?
That's an excellent question. Most people, if you have some cute kids and they're 5 years old, 6 years old, and if you get a call from J.C. Penney wanting those kids on advertising, then it's not technically hiring those kids, but they're paying those kids marketing fees. Okay, and so if they can do it, you can do it from whatever age your kid is. You know, if you took some pictures of your kids and you post them on your Solavei website where you have it there and you put it on your flyers and so forth, you can pay what's reasonable to those kids, whatever age they are. If they're 18, well, this is beautiful. The IRS say you can pay your kids from up until they go to college. Okay, as long as you're dependent, you can pay them a salary for doing things like domestic work around the home. They call it, cleaning. You have people coming over. All of this is in the IRS documents. And then you can document the pay that you make to them. And then at the end of the year, you can always issue a 1099 or W-2 if you want, or just document it. If it's under $600, really, the IRS says you don't even have to send a 1099. But if you did it properly and you keep records of it, then the IRS will allow it because you have a business and you are trying to make a profit.
Excellent. All right. Well, I know we're running out of time here, but we want to get part 2 and part 3. And so let's move on to the solution again about earning business income. How can that help us?
Okay. So what you want to do is get into your business, okay? Earn as much money as you can in your business, because at the end of the day, tax savings is money that you already made, okay? And so you're trying to reduce the amount that you spend. I think we're all in the habit of paying everything that everybody asks us to. But what we should be in the habit of doing is saying, how can I increase my income? I had one article that I read says, focus your attention on income production rather than on how can I get better credit so I can go out and get a loan, okay? Focus on how can I make the top level of any company I'm in. For some of us on the line, $250 will prevent us from having our homes go into foreclosure, okay? Some of us, $250 can pay for a car note. And if you just use that $250 to add to the other $250 you're paying, instead of a 5-year, 6-year note, you can pay off your car in 2 years or 3 years, or use that extra money to pay off your home. So the idea is find out everything you can to create income in your business. So like we've been told time and time again, you need a marketing team. In other words, you need people around you who will say, look, I need to increase my income. And you need to stay in front of those people. I never stop advertising, because to me, when I sit down and watch a television show, advertisements are always on. It comes on all day, all night, every day. And then when I go on the highway, I see it again. So I keep the information in front of people. I had a lady today who I talked to back in February. I didn't even know she was even thinking about it, but because I posted the $39 special that we have, she sent me an email and says, I am ready now because my contract is up. So you have to keep the information in front of them. Get paid for what you do every day. I think that is so important. We all are using cell phones, and before Solavei, no one was getting paid for it. I mean, it's just a simple thing that makes sense. All right. So now, every time you use that phone, pretend it's some sort of a tool that when somebody's calling you, there's your person that you're going to talk to about how they can reduce their phone bill, how they can get out of debt, not only by reducing their phone bill, but by getting in a business and getting all the write-offs. And then maximize the compensation plan. To some of us, it might be $20,000 a month. To others, it might be just $250. Well, whatever it is that you want that's going to make you financially sound, that's what you have to shoot for. Look at the numbers. It's really important that you look at the numbers. I sometimes go into a conference room and I'll just go on a board and I say, let me look at these numbers. What do I have to do? And just think, what were you doing before you got into Solavei to make money? And so we have a beautiful shot here at making some serious income that one day can replace your job income. So I look at Solavei and I said, this is one of the best companies in terms of a world-class business system that they have put in place. It really doesn't take me any time to do this. All the marketing, everything is done for me. So all I have to do is tap in and become relentless in my quest for attaining that residual income that most of us need. You know, I tell people this: if you go out to work and every time you go to work you get paid, that's called getting an income. In other words, if you don't go in, it don't come. So what you have to do is figure out a way that you can not go in and it still come. And whether it's $20 a month or $20,000 a month, you need some sort of a residual income. Because most people, if you put $10,000 in the bank, I was looking at the Treasury notes the other day, and it's like 10 years, $10,000. They pay 2%. Well, what's 2%? Inflation is 3 and 4%. And this is another thing I tell people, to think about yourself for a minute. When you first got the job, did you get a raise? And if you say yes, then you have to go back 20 years when you were making 30, 40,000. You would have to be making 80,000 today in order to be making the same money back then. So most people have never gotten a raise on their job. And so this is a way for you to get a raise. Create your own raise. Create your own income. Because if you don't, who's going to do it for you? And then when the job lets you go, then we're all back to resume writing. And you know, that market is just overwhelmed. The baby boomers and all those people out here, in the next 10 years, all of them are going to be retiring. Most people don't have anything. So this is a great way to create a retirement income, whether you're doing it for yourself or your parent. To create an extra $500,000 a month will literally change people's lives.
Well, Juan, thank you so much on that. And I know that we're out of time. We're going to answer a couple of more questions here. And I know we've got part 3, so we're going to have to just move quite quickly through this. But I want to ask a few questions. You know, I know I wrote a book just a few years back called Smart Money, and it talked about the psychology of freedom, the psychology of debt. And I think a lot of folks, some of these questions that are coming in right now, people wanting to know, can I buy Solavei gear and things like that and it be a write-off? The answer is yes. If it's building your business, if it's going towards business building activities. Today, I'm flying out tomorrow morning at 7 a.m. I'm taking my son with me. He's going to be doing the registration table. He's 13 years old. He runs it by himself. He's incredible. But in that process, we went out to Red Robin. They had little cheeseburger, French fries, whatever, some shakes. But we sat there as a family and we talked about the registration process. We talked about the T-shirts that are going to be there. That is a business expense, both of them. Him coming with me, him eating with me, the fact that we bought him some new T-shirts, some new golf shirts. We branded them Solavei. If it's developing and building your business, it all plays into this plan. You know, you want to give the government what's theirs, period. But you also want the government to help you. The tax savings is for people like you and I who are truly out there. We're not trying to scam the government. We're trying to help make the most of the money that the government is allowing us to keep, and making sure that the government knows this really is being used to put surplus back into the economy, back into our family, back into other families. A question that came up was little questions like, do I lease or own a vehicle? Which is best? Let's stop right there real quick and you can just give me the short answer. Should I lease or should I own a vehicle?
All right, for everybody, it is a different thing, okay? Some people like to be in a car every 2 years or every 3 years. When you lease a vehicle, you're paying basically the depreciation of that vehicle. If you want to build wealth, then what you want to do is own a vehicle. Now, what you want to do, and this is my suggestion to most people, look at your financial situation. If you are owing money on debt, if you are scrunching every month to get by, and you say, well, okay, I want to lease a vehicle. Well, what's the benefit to you? You have to look at your personal financial situation. If you were running a company and you wanted to get some cars and have people working, then maybe that's a good idea. But for most of us, we want to get into a car, pay it, and keep it for a little while because our goal is to acquire some level of wealth and financial education. So leasing a vehicle, depending on your situation financial, might be an option that you might want to take. But let me tell you this. The IRS gives you 55 cents for every mile that you drive a car in business. So if you're putting $20,000 on your car, 20,000 miles on your car, then if you have 50% of that for business, that still gives you about 10,000 miles at 55. That's $5,500 in deduction. In the first year or two of leasing a vehicle, you'll be able to write off the some of the miles, but you also write off the tires and oil changes and so forth. It may not be beneficial to you, but I would talk to some lease company, but also always be looking at your financial situation. Stacey, you said it nicely. Have a strategy. Don't just say, okay, well, so-and-so said that I can write off my car because if it's a lease. Well, based on what? So you want to have a strategy, look at what your financial situation is, and then research a little bit about leasing versus owning. And if owning is okay, get you a nice used car that is a quality car that's already been through the depreciation, and maybe you can hold on to it for 5 years while you pay off your house. So it's a whole lot of different things that you can do with that.
Yeah, and I love that. One of the things that I spoke of, the book that I wrote was about helping people get out of debt no matter where they're at, no matter how far in debt they were, in 7 years or less. And if they can think strategically every 7 years and have a 7-year freedom plan, in that, what I found is a lot of people can get out of debt. This happened to Larry and I when we were younger, is we would get out of debt, but then we'd end up back in debt. And what we realized is even if somebody came and gave us a miraculous check and paid for our debt when we were in our 20s, we would find ourselves going back into debt because we had habits that we had developed even from being children in specific psychologies. My family was always a family that we lived big, we lived large. We sometimes my family overspent, and lived beyond their means. So when we got money, we spent it very fast. I began to grow, and my father, as we aged, he even began to teach us better about our money. We would look at a lease and we would identify how much of that can we write off. Does it make sense to lease? Right now I've got the money to go out and buy a car, but I'm looking, meaning in multiple fashions, but I'm looking right now, what is going to be best for my situation? We're going to be doing a lot of road travel. What am I going to be able to use as a write off? Can I have a car actually pay for itself because of what the government offers, as opposed to just going out and getting an expensive vehicle? You want to always be strategic with every choice you're making, even about paying off your house. There's a lot of information that obviously we can't cover on this call, but invest time. It can make you money just by educating yourself and learning more about these kind of things. Okay, so one quick thing, do I pay now or pay later? You hear a lot about right now, no payments until 2015, no payments until 2019. I want to encourage you guys as you're listening to this, because what Juan is talking about is wisdom principles. Wisdom principles say that, the government, not the government, but businesses, big business, they're always trying to get you into some kind of golden handcuffs. So when we hear the 2-year contract and you get a $99 iPhone 5, that right there would make me run. First off, iPhone, if you know Apple, they're not giving away phones. In fact, they don't even give you a discount on anything. I've spent tens of thousands of dollars. So you've got to always think, what is this really costing me? Well, a 2-year contract, the average contract is going to be over $100. You're paying $2,400 for that iPhone 5. Those are the same things you want to think, like on this question, are these scams when they say pay later? I would just look at the fine print, because a lot of times if you don't know how to get out of debt now, and you're not willing to do what it takes to get out of debt right now, chances are in 2015, they know they're going to stab you with ridiculous interest rates if you have to go out. Most people don't have that personal resolve and personal self-discipline to say, you know what, between now and 2015, we're going to put aside $15 every single week or every single month, and we'll have that paid off. Most people won't do that, and they know that, and so they get you in the backside with the interest. So just make sure, like Juan said, you're looking at the details and using wisdom, wisdom, wisdom. Okay, Juan, let's jump. Cash flow success strategy, part 3.
Okay. So we spoke about all the ways that you can minimize your taxes, You can then start a business. You can minimize your expenses. Now, let's look at a simple strategy, and I know we have to rush, okay? What you have to do is understand that if you're making $200 or $1,000 in Solavei, the main thing that should be on your mind is how can I use this money to make more money, okay? There are strategies, so there are investments, there are different things that you can take that money and put it to work. But for instance, if you took an extra $1,000 from your business every month and put it on your house payment, just keep paying what you were paying and put another $1,000, then you're looking at 7 years to 10 years on a 30-year mortgage. So now when your house is paid for, now you have real estate and you have land. Now you can rent those out, and now it's making you money. Okay? So we want to get in the habit of not just taking the money from Solavei and spending it. Because most people in Wall Street, what they do is they use the money that they're making in Wall Street, and they're making more money. You simply refer people, and you're making money. It doesn't cost you anything. You see, most people ask me, well, Juan, what's a good investment? I say the best investment is a business. You invest $49 a month, which you were doing anyway, and now you start making $500, $1,000 a month. What's the return on that investment? You see, you're talking about thousands and thousands of percent points on that investment, just from the tax savings alone. So learn to make money with your money, okay? And then what you do is take the money that you were making on your taxes, take the money that you were making in your expenses, okay? Take the money that you're making in your business and get out of debt. The key is get out of debt, okay? I tell people this. If you look at the word God, it says, G-O-D says get out of debt, okay? That is the key. Now, once you take that money, like we're showing you here, there's a scenario, $30,000 of consumer debt, okay? If you were paying $750 a minimum payment every month, okay? Now let's use the strategy and say, okay, well now we change our W-4 and we bring home an extra $300 a month. And then in our Solavei business, by reducing expenses, we're now saving another $800 a month. So that gives you $1,100 a month that you can now place on debt. Well, $30,000 debt of consumer debt can be eliminated in 20 months with just that strategy. Now, when you finish paying off those debts, you take the $750 that you were paying plus the other $1,100, $800, and $300, and you start investing. If you get a good mutual fund or a good investment is 8%, in 7 years, and Stacey, you spoke about the 7 years, you'll have over $207,000. You save it for a little longer, in 20 years, you'll have $1 million. You see, so you have to have a cash flow strategy and use that strategy strategically to get yourself where you need to be in years and years from now. Just 7 years, folks, you can have $207,000 by eliminating those car payments, eliminating those credit card debt, those student loans and everything, and just put that money strategically on some sort of investment. And there's lots of investment companies. Get yourself an investment education and start investing. And 7 years, I don't know where we'll be in 7 years, but I know most of us on this line would love to have an extra $200,000 because now you could take that $200,000 and make money with it by getting an apartment building or a restaurant, whatever dream that you have that you want to do.
I love this. And you know what? I'm just sitting here thinking, Juan, I want to do in the month of September, I want to talk to you about having a Solavei Smart Money hangout. We're always talking about our marketing hangout, and we can see if this is going to work for you and I both. But to spend an entire month talking about these strategies, I was just thinking how ironic it is. Here we are in a place of absolute incredible financial freedom. But when I wrote the book, I wrote it in a place we had just come out of the worst days, like you, of our lives. And sometimes right where the enemy is trying to kill you and destroy you is right where God has a plan to use you. So some of you guys have been struggling financially. You're going through foreclosure right now. You're going through bankruptcy, and you don't even want anybody to know about it. But this could be that setup. When you have a setback, don't take a step back, but get ready for your comeback, because it might just be that your setback was really just a set up to get you into the comeback zone so you could be a voice to this generation. I hope somebody got that. Because I believe
Absolutely.
that right now there are people that are listening to this webinar that you have been in such a state of financial chaos, you've not known what you're going to do. And these principles, I can't even tell you, as much as I want people to make a lot of money with Solavei, Juan, I want people to know how to do a lot with the little that they make so that they make a monumental impact on the world. And if we'll take these
Absolutely.
strategies, more importantly than how can we give you, Jedi marketing strategies. Well, if you make 100,000, here's what I've always said: money only makes you more of what you are. If you are a bad money manager, you will just be a bigger, badder money manager. But if we can teach you small principles on how to be faithful with the little that you're making, then I believe you will be able to be entrusted with more and you'll be able to give more. Now, we've got a couple more slides here and we're going to go over these in more detail, and we'll let you know when that is going to happen. But we're going to do some back to back smart money discussions about how we can help you guys use what you've got. Talk to me about this quick info pack that we're about to run through. Are you there with us, Juan?
Yes, Stacy, I did not hear that. Somehow I got distorted a little bit. Can
We're
you say
just
it
on
again?
the quick info pack, common tax deductions.
Okay. So a lot of the information that are discussed here, Stacy, I'm not sure how far you want to go with it, will give people an idea of what it is that we're talking about. And every American that have a job or that live in this country need this system. They need to understand it. So according to many experts, every American need a business. And if you look right here at the big refund, big tax bill that came out a few years ago at the IRS, when I saw this article, they posted it on their website, I was like, wow. If you look at here, it says some refund facts, right? Federal tax refunds to individuals total more than $215 billion. Well, that's in 2005. It's probably more now. But it says the average refund was about $2,126. Well, where does your refund comes from? It comes from your own wallet or your purse. When you tell your employer how much to withhold from your paycheck, or you make an estimated tax payment. For the average refund, that's about $40 a week too much. That's what we were talking about. And it says that you might be using this as extra withholding or forced savings. Uncle Sam does not pay interest on refunds, except in special circumstances. So put the money in any type of savings or pay down your debt might be a better option. So here it is. IRS says, instead of paying us $50 a week too much, use it to get out of debt.
Mm-hmm.
This is from Uncle Sam, and most people don't understand where the mismatch comes from. And it comes because people overlook the deductions or credits they'll take on their tax returns when they determine how much to withhold or pay estimated taxes. So by being in a business, most people now have deductions that they have to incorporate into their tax return that will allow them to keep most of the money that they make on their job.
Yeah, and I love this. If your refund was more than you wanted it to be, or if you had a penalty because you owed too much, or maybe you wrote a check for more than you could comfortably afford, consider changing your tax withholding. And here's the IRS actually saying, get smart, people. We want you to do this. I know that Larry and I, we've had times where we've gotten stung, and then you go to a professional and you say, help me. And generally it's at the last midnight hour that you're doing it. And then you have to file an extension. People, if we educate ourselves, we can avoid a lot of the headache and put yourself ahead of the game financially. Now, you talked about changing your W-4.
Okay, so if you notice on this form, the purpose says complete this form so that your employer can withhold the correct federal income tax from your pay. And this is the key. It says consider completing this new form W-4 each year and when your personal or financial situation changes. So whether you have a baby, whether you get divorced, you got married, you have a new job, you have a part-time job, or you started a business, your financial situation changes. IRS says change it immediately. Okay, most people, when they first get a job, they never ever go in and change this form. So they continue working on the same form when they're married, when they're single, when they're divorced, when they have their spouse works, when their spouse doesn't work. Everything starts changing, and most people don't understand. If you scroll down a little bit, you'll see on part 2 of the form, and this is all part of the form. It's broken down a little bit. All right, it says here, personal allowance worksheet. So you keep this for your record. Well, what does it say? Enter one for yourself. Well, most people can enter one. Enter one if you're single, or you're married and have one job and your spouse does not work. So if you're single, you will enter another one. So that gives you 2. Then, of course, you would enter 0 for your spouse if you're single, and this is a single person. Then it says enter your number of dependents. So if you have 2 kids now, you'll go ahead and enter 2, plus the one on A and the one on B. That gives you 4. Now, if you're going to file head of household because you're not married and you have 2 kids, you have to enter another one. And then you enter another one if you have child or dependent care expenses of $1,900 or more. And then if you notice on G, which is really important, it says child tax credit, including the additional child tax credit. So there are 2 child tax credits. One is the additional one if you didn't get it in the first one. So it says if your total income will be less than $65,000 or $95,000, enter 2 for each child. So that gives you 4 allowances right there. And so now with 4 plus 2 plus 2, you almost at 8 allowances that you can claim. Notice again on line H, it says add these up and enter the total here. This may be different from the number of exemptions you claim on your actual tax return. So most people would only put their dependents on here. And so they're losing thousands and thousands of dollars in the front end, and it's causing them to get into debt in the back end. And those debts can last for 10, 15, 20 years.
And so one of the questions coming in here says, what does that mean? So what is per allowance? You know, if you have 5, what does that mean? What do you get for 5?
All right. So what happens is the IRS has a publication of 15, and your employer will look at the allowances that you claim. So if you claim 0, they will take more money out of each check and send it to the IRS. If you claim 5, they take less money out of your paycheck. And there's a cap depends on the income that you make. So let's say you're making $35,000 or $40,000 and you have 8 allowances, the IRS takes no money out of your check. In fact, you can even claim exempt from taxes. Because now in the back end, when you file your tax returns, you have the IRS, you have your kids, you have your house, you have your church information, you have everything on there. So now you really don't need to be claiming or having the IRS take any money out of your paycheck. So use the personal allowance worksheet or go to the calculator and it will help you do that. And if you notice here, it says this is the actual form, the W-4 form. You put all your name and address and so on, and then on line 5 it says put your total number of allowances you're claiming from the H above. And so that's where they ask you to put it in 5. So if you put 5 there or 6, then most likely no taxes will be taken out. If you put 0, you'll have a whole lot of money coming out. Now, if you notice, it says on line 7, it says I claim exemption from withholding and certify that I meet both of the following conditions. And these conditions are last year you had a right to a refund of all your federal income tax. Well, that's why people end up getting $5,000, $10,000 in refund, because they got all the money that they paid in. So they can actually literally change their withholdings, claim as much as they can, and get a raise immediately on their next check, because the employer has to change it when you change it, and they have to do it immediately for your next paycheck. So those of you who want to get an extra $100, $200, $300, $400 on your next paycheck, go tomorrow and change your form.
That's excellent.
Especially if you Solavei, yeah.
Well, I'm going to let you guys go ahead. Juan, we're going to close it out just the last couple slides here.
Okay, this slide basically says that it tells you what business expenses are. Of course, it's carrying on a trade or business, and the expenses are deductible if it's operated with the intent to make a profit. And this is IRS wording. Okay, the expense to be deductible must be connected with or pertaining to your trade or business and be ordinary and necessary. Ordinary is one that is common and accepted in your business, and necessary means that it is helpful and appropriate for your business. And so if you are running a tailor shop and you're in Florida on vacation in Disney World, the IRS says, well, why were you in Disney World? Unless you were at a tailor convention. That is not ordinary and necessary that a tailor would do. But being in Solavei, you can literally go to Florida, visit with family and friends, do a presentation for them, give them information, help sign them up, get their phones ready, and then part of that trip becomes totally deductible as a business expense while you're there. So do your business around your vacation and all those things, and you get to write it off. And the next one you can show real quick, it kind of sums it up.
The business versus personal expenses. This says generally.
Right. So right. You cannot deduct personal living or family. Anytime the IRS says, Stacey, generally, it says however. It's one of those things. It says generally you cannot deduct it, but however, if you have an expense for something that is used partly for business and partly for personal purpose, divide the total cost between the business and personal. You can deduct as a business expense only the business part. So in other words, if you use your phone for personal and you use it for business, well, you can divide it up both ways. But most of the time when you're in a business that involves cell phone, then you go out and get a cell phone that's appropriate for your business and you're promoting, then most of that cell phone can be deductible. And these are some of the most common business deductions. You know, you have your car and truck expenses, interest, communications, meals, entertainment, travel, wages, depreciation, medical. These are basically all the deductions that you need to keep track of, and you can basically wipe out the amount of money that you pay federally, legally. And each one of those have different explanations for them, but it's real simple. Keep track and keep a record of them.
Excellent. So some strategies going forward. Here's a few that we've got for you. Obviously, first off, sign up with Solavei. Get your business started. Get a copy of your 2013 income tax return. Get a copy of your last pay stub. I encourage you to take a screenshot of these right now. Again, request a copy of your W-4 from your job. These are all reviews of what we've talked about in the last hour. Log on to irs.gov and search for that W-4 withholding calculator. That's a very important one that I think all of us need to be doing. Fill out the W-4 and give it to your HR department. Receive a pay increase in your next check. Okay, Juan, I'm just going to tell you the amount of wow OMGs that I've gotten on this webinar alone tell me that this discussion is not over. However, what we're going to do now is I'm going to take all of the questions that have come in, and we're going to take over the next number of weeks. We're going to find a set time where Juan and I are going to open this discussion and really begin to help you, not just with taxes and withholdings, but we're going to start talking smart money strategies that will help you truly make the most of your Solavei business. And I'm not just talking trios and SIM cards. I'm talking overall. If you have questions, Juan has opened himself up by offering his website and his phone number, and I encourage you to take advantage of it. Of course, you guys can find him on Facebook as well. Juan Williams, he's in Dallas there. Juan, thank you so much for being a part this evening. Thank you again, and we know that this has been a tremendous blessing. Any final words you'd like to leave?
Folks, use your phone to create unbelievable wealth, not only in creating an income, but also using the tools that the IRS has in place, the banking system has in place, that is out there for us to create something that we can leave for our children. It's not just about us. It's not just about, a few people that we meet, but changing lives. And for most of us, having an extra income is wonderful. But really, being able to send your kid to a nicer school, or help your mom or your grandmother, get into a better home, or if someone is sick, to get a better health care. Those are the things that I think Solavei is doing. It's really showing you how you can better your life and those around you. So I'm just thankful and grateful that we have a leader in Stacey who has put this together and all her energy and efforts in helping us to change families and change lives in Solavei. So thank you guys. I appreciate and anytime, anywhere. You can call me. I love helping people. I love teaching people the strategies that they need to achieve personal and financial success.
Well, thank you, Juan. And that really is the reason why we call it the Empowered Living Network, is we want to empower you to have a great life, not just to have a great business. We want to see your families flourish. We want to see your homes become, your houses turn into homes. We want to see your kids grow up and call you blessed. We want to see them be blessed. We want to see you be able to make the most of every penny that you make. We want to see you live debt free and lives that aren't only debt free, but lives of freedom. We want to talk to you more in the future as we go forward, but how you can take something simple like a phone or a SIM card and turn it into a revolution in your own life. I just want to thank you again, everyone, for being a part of our webinar this evening. Remember, now is the time, this is the place, and you are the one to start the revolution. My name is Stacy Wallace, and I, along with Juan, Jose, and all of the leaders that participate in the Empowered Living Network, we are believing the best for you. Good night, everyone.